this is a landmark deal, and I don't want to understate that enough. Like it's a phenomenal deal, and what Robin Cooter has been able to achieve with his team over the last 9 years in less than a decade has been truly astonishing. Now, from our perspective, it demonstrates that there is long-term patient capital looking to deploy capital into companies with structural growth drivers. And the cloud sector and the technology sector is one of those. Unfortunately, it wasn't listed, and we're largely a listed fund manager. But we actually were able to get indirect exposure to the AirTrunk deal. One of our funds, WAM Strategic Value, the ticker is WAR, holds a significant investment in GDC, global data centres. As you can see from that share price over the last 12, 18 months, they've significantly benefited. Elsewhere in the Australian market, there is NextDC as well that's also held within the portfolio. And I guess both of these talk to the fact that there is a lot of demand for data centre capacity.
And so do you believe that this deal is likely to influence the valuations of other companies, such as the ones you've just mentioned, that are listed on the ASX?
It definitely could. From our perspective, it underpins valuations in the sector. $23.5 billion is massive in the scheme of our market, but it's also significant in the scheme of the global market as well.
Australia hasn't been considered a major player in the data centre AI space. It sounds as though you believe that's about to change.
We say that, but at the same time, there has been a lot of innovation in Australia. You know, NextDC has come out of Australia. AirTrunk, obviously, as we talked to. You've got Canberra Datas, which is owned by a listed vehicle, Infratil, and Macquarie Telecom. So there are a number of really innovative players in Australia meeting the demands of hyperscaler cloud partners. And we think this starts to talk to the fact that Australia can punch above its weight in this sector.
On Wall Street, Nvidia was down overnight by more than 9%, keeping in mind it had been up more than 40% since that August sell-off. Are investors still trying to make up their minds about AI and whether that stock in particular is simply too expensive?
It's a great question. I think we were doing the analysis the other day and it suggested that Nvidia still beat market expectations, but it beat by the smallest amount it has beaten over the last probably 6 quarters or so. And so I think investors are starting to become a little bit wary about where expectations have ultimately gotten to for Nvidia. From our perspective, AI is real. And it will be incredibly transformational for the global economy, similar to the internet. And I don't think that overstates it at all. But we're also cognizant that early technologies and technologies ultimately go through a hype cycle as well, where initial results aren't as good as elevated expectations, and so you could see some disappointment in the short term. So I think that's what's ultimately playing out in the Nvidia share price at the moment.
Sam Koch, great to speak to you.
Thanks for having me.